Good evening. This is the Elliott wave update for the Nasdaq 100 and the S&P 500 for Wednesday, May 17th, 2023. What a day. That's where I'm going to start. What a day. I was expecting additional upside, but boy, when the possibility that the debt ceiling agreement could be reached, they absolutely pushed the buy button. And the initial response pretty much was led by algorithms that are programmed to pick up sentences or keywords out of a news release and react. And it did. But the subsequent additional reaction was to drive it all the way back down. You can barely see it, to be honest with you. And I will try to show it to you. It's right here. Ran it up, dropped it back down, and then they just started, and they were not going to let go. Now, what kind of happened in the meantime? It was not necessarily something in the Nasdaq itself. It actually took place in the SPX options. And there was suddenly this humongous buying within one strike, where it went from, I believe it was offered at 5 cents. It was so far, it was pretty far out of the money. And suddenly it shifted and went to $6. And that flux in volatility, in premium, in gamma, and everything else just absolutely turned the S&P, along with all of the coexisting underlying companies within the S&P and within the Russell and within the Dow and within the Nasdaq, suddenly just exploded. And as you can see, came once, came twice, third time, fourth time, all the way up. This is the hourly chart. It just started. And actually, I believe that news came, I apologize. The news came here within this hour. And I need to I do want to show you because it was pretty fascinating. That was the initial. So it came about 11:15. That was the initial. That was the response. And then it just started. And once this came, this is where the purchase came. And then they started to buy it. And it just went and went and went and went without stopping. Now back to that hourly chart. I apologize for that I was a little bit early on where that actually took place. So what did it do here? It really started to fill in, if not complete, minute wave 5 of minor wave 5. Now, as we stand, I had already worked, right? We had connected minor 1 fibs to minor 5. That showed that if minor 5 were to be equal to 1.618 times the length of minor 1, it would come in at 13,645. Well, this thing got up to 667. I want to say it actually was a little bit higher, but no. It was 13,667, almost 68. And so it exceeded that resistance by a fair piece, by almost 30 points, or at least 20. And then it started to back off, but it played right to it for the balance of the day. And in fact, it closed pretty close, just a bit underneath it. Now, having reached that 1.618 level, coming back down, surrendering it, getting back up above it, and then closing right at it, keeps it in place for right now. But even if I'm counting this up, 3, 4, and now we're in that 5. Even if I'm going to use that as the 4, but this is the 4, then I still have 1, 2, 3, 4. Maybe are we still now expecting more? So we still see 13,680 or 13,730? Those still remain valid. In fact, so does 13,797. As does the balance. We really have 2 more days. until we get to that Friday expiration. And when I have to compare what the Nasdaq is doing was so far ahead, it would be pretty difficult to try to imagine a scenario that the Nasdaq would actually start to sell off while the S&P went up. Could happen. For sure it could happen. We're going to have to wait and see. Because right now we can count it as complete. But again, balancing it out against the S&P, which put in a good run today, I'll get to that in a minute. I'm leaving open the potential that we still have a little bit more upside to do, and 13,700 is not out of the picture by any means. It's been quite the run. But let me add, this was classic. Buy the rumor, sell the news. We don't have the news yet. So we don't have where it's like, oh, yep, we agreed, or nope, we're not in agreement, so everything's off the table, which really would be a then sell the news. But the rumor being like, oh, we should be able to come, it looks pretty good that we'll come to an agreement. Now that Speaker McCarthy said, the White House concurred, and that progress is being made towards a solution to raising the debt ceiling, or a conclusion to raise the debt ceiling. So it just becomes extremely interesting to trade. Initially, the markets were very thin, but after that news, the markets really, the volumes picked up substantially. Zero DT options became incredibly volatile in all directions. And it was pretty incredible to watch, and dealt a lot with just what comes next. But as I've continued to count this, we have left open the potential and showed all of that internal potential all the way around. So it's pretty wild to now see it come into fruition. And if I thought we were close here, we're even closer here. And if we get up into here, we'll be looking at, this is getting to be complete. Now, mind you, see, we've got, these are the C wave, and this is the fifth wave. So we could put a few more in here, but it's really beginning to look like, it's beginning to look a lot like Christmas. I hate to say that, but that's what just came into my mind. So I want to put in one more set of fibs, which would kind of cover us. If this is 1, 2, and that's 3, and this is the 4, and now we're in that fifth. Let's put in for the minuet fifth wave what that might look like. So we're going to start here at this low, go up to this high, and shoot over to, I think that'll work. Let me see what this low is. 474, and this low is 475. So yeah, just this one. Okay. So now we're getting very crowded in here, and you can see we have several levels. We had where the minuet wave 5 would have been 1.38, 2 times the length of minuet wave 1, and that was 13,663. Then we have this additional at 680, and then we have 1.618 from minuet wave 5 would be equal to 1.618 times the length of minuet wave 1, and that number is 13,694. Those are very much in the picture and very much alive. Because at best what I can think I can count here is we got a 1, a 2, the 3, and a 4. 4 may not be over, so we could drop back down for the 8. They're all sitting right there. I believe that should contain it, and that we likely should hold above 13,600. Now, overnight, who knows? We have a lot going on, and a lot of things can change. So I think we're going to allow for this downside. What the market can't do right now, it really can't break minuet wave 1, and that's all the way down there. But even within this wave, I would think that we shouldn't break below 13,005. Let me get that number exactly. 13,540. So on the way back down, and unfortunately, yep, we got to wait that long. We got to wait over 100 points from pretty much from where we closed. It's like 90 points or plus a little bit more. So this is the story right now. I'm going to leave open the potential. Now, again, tomorrow we have Philadelphia Fed factory initial jobless claims. We have the Fed Governor Philip Jefferson speaking. We have Fed Vice Chair Barr testifying. And we have existing home sales and U.S. leading economic indicators. It's just going to stay interesting, right? Because we continue to get our economic numbers. And if they don't match up with this, which is glee that we're going to have a raising the debt ceiling, we still could just fly lower, right? Because we have that, again, buy the rumor, sell the news. Because in all essence, okay, we're relieved that we're not going to default on our debt, that the U.S. government continues to hopefully have good standing around the globe. Damage is done, but hopefully we still will have the ability. Because the first thing that's going to happen when they raise the debt ceiling, folks, is they're going to sell a lot of treasuries. They're going to sell a lot of bonds. They've got to raise the money so that we can pay our bills. So the only way we can do that is we sell more bonds. I doubt that the world is going to want to step up to the plate and buy the bonds at a lower rate. So let's just talk about, we go from this rumor or this relief to reality. So we still got a long way to go before all of our problems are solved. So here's what we got. I think we can go up. We likely can get all the way up to 13,700 pretty easily. We got close today. So leave these all open, all of these levels, and play it by all means. It was playable. They were like, just buy it and just ride it and ride it and ride it. So lots of money left on the table and lots of money to have been made. Over in the S&P, what a story that is. If you remember how I left this, I left it as the market, if it's going to break out of this triangle pattern, which it still fit the triangle pattern. I mean, I can draw the trend lines here and here, and you're still going to see that wedge. But I declared it over here. And then again, it just launched up out of it. And no matter what I had said, even if we're going to count it as 1, 2, which it ends up being, and 2, not a triangle, ends up being a double ABC, the launch was exactly what we needed to see, or what I needed to see. Now, wave 3 may not be the longest wave, because it looks like wave 1 is going to carry that distinction. And it leaves us still in this diagonal pattern, maybe, but I don't think so. It's just not congruent right now. But maybe we get a diagonal up here in the 3rd, then we drop in a 4th, and we get that 5th. And so it depends on how high we get, but it's now going to get even more interesting, because we still need to apply and follow the Elliott rules as they apply to our count. So I've gotten this far, but what this does suggest, this is not out of the picture. This is not out of the picture. It would be amazing what would push it to that level, but maybe a secondary relief pushing of buttons followed by an immediate turn. So in other words, the news comes in, and again, those same algorithms that trigger off of news pick that up, they push that button, and they go out and buy maybe 100, 200, 300, 400 futures. Who knows how many futures they buy or whatever, but it gets pushed up to a very high level. And then reality, okay, we're not going to default. But okay, back to reality. We're still confronting a lot of problems. Ba-boom. And it sells off immediately. So there's that. Now, as to what level, there's all kinds of things, but basically, even using Elliott guidelines and rules, I am looking for this C wave. Believe it or not, that's what's still in force, intermediate C wave, to get above wave A. That level is 4250. Now, once it achieves that, we're hitting resistance on the nose, 4251, 4262, 4309. But right here is the big bucket full of resistance that even with this powerhouse rally that we got today, it's still below 4,200. We're still not even able to get above the high of wave 3 with this massive rally we had today. So this structure problem still exists in a way, but I'm leaving this all open. We had to believe that if it was going to go up, it had to go up, but it couldn't look back. And that really is what it did. Really is what it did. So again, we need more. And maybe the market does it. So we have to wait. So, but I am looking for at least get above this 4206. And that leaves us 4220. And then it's just truly a little bit harder of a push. And then we're sitting at 4250 to 62. That I could accept as the completion point for intermediate wave C. As difficult and as nasty as this whole move up has been off of that 38.39 low back in mid-March. So this is only 2 months in, and boy, has it just been one big battle up, battle down, battle up, and just volatile and all kinds of crazy stuff. Seems like an eternity, but folks, it's only been 2 months. And trust me, right? As day traders, that's an eternity. All right. So this is where I'm going to leave it. I'm still looking for additional upside. If this market breaks down, as I said, I gave that level in the Nasdaq. Here, let me come back down to the hourly chart so we can see it clearly. Here, again, first of all, if it starts to break down and we get below 41.43, which is kind of where I would put the top of this small wave 1 of 3. If not, then we're looking at here, which it already is below it. So again, it's strange, it's weird, and I'm just going to have to go with it for right now. But in terms of breaking down, if it came back down and it broke back below 41.45, it's going to start to really throw some hints at like, this is not a good thing. If it then again breaks below 41.09, going to put a little bit more sourness on this whole thing, and like we could be all done. And again, failures abound. So I'm just kind of saying, I don't know how it's going to be counted, but I'm just saying, if we start to break these levels, it really begins to turn the picture negative. And if it's going to go, it likely will go as fast as it went up. So again, there'll be a lot of things will be involved, a lot of shifting out of something that they just put in or whatever. But it's going to get crazy from here. That much I want to say. I hope that we're all really good volatility traders. If you're an option trader, you love the volatility because that equates to premium, and option traders love to sell premium. That's the name of the game. So there's that. In the futures, it could be a little bit more difficult. The moves could be really choppy. They could be quick. They could be severe in both ways. I'm going to wish everybody a really great trading day tomorrow. Again, let me reiterate, we do have a bunch of numbers coming out. So we have at 8:30 a.m., we have the Philly Fed factory and the initial jobless claims. Both of those, pretty good. They could be market movers. At 9:15 a.m., Philip Jefferson, Fed governor, is going to start talking. Vice Chair Barr will start talking at 9:30. Actually, he's not talking, he's testifying, which means he's somewhere in the Senate or the House. And then at 10 a.m., we have existing home sales as well as U.S. leading economic indicators, market movers. So we got back to a day where we have a lot of market movers. All right, next update will be on Thursday, May the 18th.